Asia markets are all in the green today, with the Nikkei in Japan up 0.85%, the Kospi in South Korea 0.7%, the Hang Seng in Hong Kong nearly up 1.7%, and even the Shanghai Composite in mainland China is now up 0.5%. This is all off the back of a very positive session in the US, with markets soaring on soft inflation data. US Consumer Price Index rose 0.3% in April. That's below the 0.4% rise predicted by the Dow Jones. US CPI climbed 3.4%, that's year over year, totally in line with market estimates. After the lighter than expected inflation reading, the major averages in the US touched record highs. All indices rose more than 1 or 1.5%. And today, investors will have a batch of economic data to look forward to, including the widely watched weekly jobless claim. Let's now get more on this with Mike Ingram, who is an independent market strategist, and he joins us now live from London. Great to have you with us on the show. Mike, softer than expected CPI there in the US. What is it signaling exactly?
Well, the popular narrative is it signals a cooling US economy. If you look at the last GDP print from the US, the Q1 numbers, they were quite disappointing, certainly significantly below consensus. If you look at the April non-farm payrolls, they were the weakest we've seen in 6 months. And also, wage growth seems to be moderating. So this all fits into the sort of soft landing narrative, which allows the Fed in principle to start cutting rates during the course of this year. And in terms of the market reaction to that inflation print that you mentioned, certainly about a week ago, the markets were they were beginning to wonder whether actually the Fed was going to get around to cutting at all this year. If you look at where we stand right now, they're pretty confident the Fed will start cutting in September, and there's a decent chance that we might even see 2 cuts during the course of 2024. The problem is that if you look at the producer price inflation, which some people regard as pipeline inflation, that was significantly over estimates. So it may explain why Chairman Powell over the last day or two has actually been leaning against the narrative of immediate rate cuts.
Interesting on the PPI. And Mike, meanwhile, we are seeing stocks really going up and up in the US. I mean, unfazed by all sorts of geopolitical tensions that are now currently going on. So what sectors are now interesting if we look at equity markets in the US?
Well, if you look at how institutional shareholders are positioning at the moment, it's quite interesting because they're overweight cash, which might say that they're quite cautious. Also, if you look at the sectors, they're in sort of defensive sectors like telcos, like healthcare, like consumer staples, and on the flip side of that, they're quite concerned about things like real estate. What I think is probably more interesting rather than the sector is actually the geography, because what we'd seen for a lot of the year was people saying, well, US is expensive, we should be rotating out of the US and into Europe. That seems to have changed. People are getting out of Europe. UK has got a little bit of an overweight. It's been an unloved market for a number of years now, but they're generally sticking with the US. They're preferring US equities. One last word. A little bit cautious on the Magnificent Seven, though. There's been a wide range of performance this year, and I note that Apple's only just started to get into the green for the year, just over the last few days.
Interesting, very interesting. Mike Ingram, thank you very much for being with us today.